And gold went down from $800 to under $50. So that's do the math. It's 60, or 70%. Then we had the second great bull market from 1999 to 2011. And gold went up 670%. Then we had a bear market. It's funny how these things go in cycles from 2011 to 2015. But you can call the bottom. It was December 16th, 2015. Gold was $1,050. Now, so I'm talking to US dollars. That was the bottom. And I saw it at the time, and I called it at the time based on a conversation I had with Jim Rickards. It's going up. It's going up a lot. And let me just back that up a little bit. Because that's easy to say. I don't say things like that without love analysis. There are three different ways to think about it. One is just some technical analysis. This is the third great bull market in gold in history. And when I say history, I'm only going back to 1971. Because prior to 1971, gold was money. So you didn't have a bull market or a bear market. It was fixed to the dollar. The people who banged the table and said, give me a gold standard. And they will be careful what you wish for, because in a gold standard, you're not going to make any money on gold because it's fixed as pegged to the dollar. If you want to make money on gold, you would actually be against a gold standard because they keep screwing up the currency and the gold goes up. But we had a bull market from 1971 to 1980, and gold went up 2,700%. Then we had a bear market from 1980 to 1999, and gold went down from $800 to under $50. So that's do the math. It's 60, or 70%. Then we had the second great bull market from 1999 to 2011, and gold went up 670%. Then we had a bear market. It's funny how these things go in cycles from 2011 to 2015. But you can call the bottom. It was December 16th, 2015. Gold was $1,050. Now, so I'm talking to US dollars. That was the bottom. And I saw it at the time, and I called it at the time based on a conversation I had with Jim Rickards, who's the greatest commodities trader in history. And we were down in Dominican Republic and Costa de Campo during the bear market. I said, Jim, I think about gold. He goes, well, I own it, but I'm not buying more at the moment. I'm waiting. I'm not selling, but I'm not buying more. I'm waiting. And he said to me something that just hit me right between the eyes. He said, gold is going to the moon, but no commodity goes to the moon without a 50% retracement along the way. There comes a time when it drops 50%, and that is like the second liftoff. And then it goes to the now. Take the bottom. In 1999 was $250 an ounce. The top was $1,900 an ounce in August 2011. So it's $1,750, half of that. So 50% retracement will be down at 25. So 1900s minus a 25. But you had 1,075. Well, bingo, 1,050. That's close enough for government work, as we say. So we had, when I talked to Jim Rickards about this earlier I said, okay, there's your 50% retracement using 250. You have to have a base to using 250 as your baseline up to 1900s. Take that gap down to 2%, boom, 1,075. We were 1,050. So that's the low. Now it's getting close to 1900s again. I mean, actually on an intraday basis, I think he just kind of kissed the all-time high. I was like right there. So there's the full retracement of the bear market. But this bull market, the third great bull market, started December 2015. We are up almost 90%. You go from 1,050 to 1,900. That's about 90%, my 86, 87%. But bear in mind the last two bull markets, remember I said 2,700% and 670%. So 80% is 85% is great. But when you get into like 600, 700, 800% or 2,000%, you're talking about $15. 0,000 by 2025. So if we just did the average of the two prior bull market, I'm not even talking about the higher of the two. Take the two bull markets, average the duration in the game, and then apply it to December 2015. You get to 15, the exact number is $15,000. By 2025, $15,000. Now it's by 2025. But people got last 4 years was like, fibers was like, yeah, but to get to from 2,000s to 15,000, You got to go 3,000, 4,000, 5,000, 6,000. You can make a ton of money. So that's where it's going now. Could it go down tomorrow? Sure. I mean, it goes volatile. I don't get too hung up on it because I'm kind of a buy and hold person. You know, I don't get too euphoric when it goes up, but I don't get depressed when it goes down. In fact, when it goes down, I like to see it go up for our listeners and our readers. But personally, I don't mind when it goes down because you can buy more at a cheaper price. Because I know it's going up, I know where it's going. So the answer is just a little, again, sixth grade math is usually sufficient when you get to higher levels. A fixed dollar increase is a smaller percentage increase. So people go, oh, we went from 1800s to 1900s, went to 2020, 120. And that's a big deal and for the good for all this. But those $100 increments get to be more and more frequent and more common because they start looking like 1/2 of 1%. 1 out of 1% is not a big deal in the market. So you're going to see that on a daily basis. So my advice to people, of course, is buy gold. But I said that 1/100, 1/200, 1/200, 1/500. 2,600%, I've said it all along, and people don't buy it. People also accuse me, they say, well, Jim, you're just talking to a position, you're just trying to sell gold. I'm not a dealer. I don't make any money if you buy gold. Good for you. But I'm not in the business. I'm a writer. I'm an analyst, but I'm not a gold dealer. I'm actually one of the few analysts apart from yourself and a few others who are not gold dealers. But I think that gives you more credibility because you're not selling gold, you're understanding gold. But for anyone who hasn't bought it yet, because denial is a powerful thing, they'll say, well, I missed the boat and now it's up the side, it's going to go down. You haven't missed the boat. I mean, again, 8,000, 90% is a good run, but this is going to go multiples of that.
Jim Rickards provides a compelling analysis of the current gold market, highlighting its historical trends and potential for significant growth. With a meticulous examination of past bull and bear markets, Rickards emphasizes the current bullish trajectory of gold, projecting substantial gains ahead. His insights, backed by both technical analysis and conversations with industry experts like Jim Rickards, underscore a strong case for investing in gold. Despite potential short-term fluctuations, Rickards remains steadfast in his belief in gold's long-term appreciation. His advice to buy gold echoes consistently throughout, urging listeners to consider this opportunity for wealth preservation and growth. As the gold market continues its upward trajectory, Rickards' insights serve as a valuable guide for investors navigating the evolving landscape of precious metals.